Hi, Peter Boolkah here, and welcome to today's edition of The Transition Guy, where I'm going to be looking at the fact that winter is coming for your business, and are you ready for it? So what does it mean winter is coming? Well, if you take a typical year we have 4 seasons. We have spring, summer, autumn and winter. Now if we look at farming as an example, spring is where we sow the seeds and things start to grow. Summer's really when things start to really take off, the crop is nice and healthy, everything blooms. Then come autumn. Well, autumn's really important because guess what we do? We harvest the crop. And then winter, we need to make sure that we have enough crop harvested to get us through the winter. Well, how does this apply to you as a business owner? Well, let's think about it. What happened during 2008 or 2007, 2008, and just a little bit 2009, we had the great financial crisis. Probably the worst financial crisis that people alive today have experienced since the Great Depression. You can think about it, it was a global phenomenon. Everyone sort of was struggling, or nearly everyone was struggling. Businesses were failing. Businesses that survived were hanging on by the skin of their teeth. And then come 2009, we entered spring, where we started seeing the recovery, businesses started to take off again, and the economy started to improve. Now you think about it, well, that's a long time ago. 2009, we're talking the best part of 8 years ago. Well, now we're experts will argue that we are now as a season in late summer. So if you look at the economy, yeah, business is buoyant. A lot of businesses are the best they've ever been. Markets are kind of at their peak. The usual symptoms and signs that we are at the top of a market. Well, what comes next? Well, next comes autumn, where things start to cool off. Now in the UK, it's actually starting to be reflected in the property market, where the property market itself has started to a degree cool off. We've started to have some decreases in property valuations, etc. So that's a great indication that perhaps we're heading towards a winter. So the reality is this: what are the purposes of the seasons within business? Well, as a business owner, when you're out there in spring, you need a lot of capital in your business because you're hiring people massively, you're having pretty high growth, etc. It's a beautiful time when you're expanding. And that's even further compounded in summer. You see, when we're in summer, that's when we're at maximum expenditure. We're growing very fast, we're extremely busy, and it costs a lot of money out there to sort of hire people in, buy product and equipment, buy stock. And what you tend to find is that business is probably at its fastest. And then we start sort of heading towards autumn. Now in theory, autumn, business should be quite stable. There will be growth in business during autumn, but it's not going to be quite as pronounced as it is in the summer. And really, autumn's about how do we start reserving some capital? How do we start building money in the business? Now, one of the things that I've noticed right now is many businesses out there, especially the ones I get to speak to, well, there's a number of businesses out there that are still struggling to recover from 2009. So the great financial crisis, they got through that, but the reality is they still haven't built up the capital reserves. They're still trying to work themselves out the hole that they had. And that's really dangerous, because at the end of the day, unless they start making money soon, what do you think is going to happen when winter comes? They're not going to have enough money this time around to get through the winter. So really now it's about, as we approach the autumn, it's about saying, well, how as a business can I conserve my cash? Now, most business owners tend not to think that way. They tend not to build what I call a fortress balance sheet. A balance sheet that can withstand the winter. You see, you think about it, when winter comes, what needs to happen? Well, we need to have enough cash behind us because business is going to drop. Whichever way you look at it, business is not going to remain the same as it is now. We're going to have to let go of people. We're probably not going to make as much profit. In fact, many businesses during the winter actually make a loss. And the question is, if there's a financial downturn, which there will be, can your business survive 2 years in the wilderness? Because on average, if you look at a recession's anything between 12 and 18 months. That's on average. We don't know what the next one's going to be like because we've never experienced one. since the GFC, so we don't know what the rules are going to be. But the reality is you've got to think, can you survive 2 years? Now what happens in the winter? Well, the banks are not going to lend to you because they're just not interested. Unless you're a super business, they kind of rein it in. And if you don't have the capital reserves behind you, well, it's going to kill you. So right now, you've got to say to yourself, number one, what strategies have you got in place to build cash? Now, the one thing I say to any business owner, as a rule of thumb, I always say, have 10% of your turnover available in liquid cash. So if you're a 1 million turnover business, make sure that you always have £100,000, dollars or whatever, in the bank at any given time. Because that affords you the flexibility to make sure that you can be able to hire people and you have the cash to get you through. The other thing I would say is start looking at your balance sheet and actually say to yourself, is my balance sheet a fortress balance sheet? i.e., if I need to, can I access the cash tied up in my balance sheet? So again, many business owners I come across, they say to me, guess what? I'm putting all my money back into my business. Yes, so they keep on taking any profit and they invest it, which is brilliant. It's a nice thing to do. But I've come across businesses that had £4 million tied up in their balance sheet, i.e. they had it tied up in machinery, like plant. They've had it tied up in stock. So what that means is, and they're cash flow poor. So how many of you are balance sheet rich, cash flow poor? Now, in a winter, economic winter, you can have a £4 million balance sheet and that's basically worth shit to you. Because if you can't access the money tied up in your balance sheet and you need cash to continue trading and you can't get access to it, you're going out of business. And that's what happens a lot in a recession, you see. A lot of people have brilliant balance sheets that they've built up over 10, 15, 20 years. But the reality is when you desperately need to access that cash, you're not going to be selling the stuff at its full price. You'd like to believe you can, but you've got to think, do you know what, if I had to have a fire sale and I needed to access my cash straight away, what would my balance sheet be worth? This is the whole thing about preparing for winter. And it's the same personally. If you look at the UK right now, where we've got a massive conundrum, where we've got interest rates at the lowest levels ever. People are borrowing to their eyeballs at the moment. So you talk about credit card debt, that's massively on the increase. People are going out there. Savings are potentially at their lowest point ever. And at some point, interest rates are going to go up. Whether it's personally or whether it's for businesses. Rates are going to start going up. Unless we've got the flexibility in our business, a balance sheet that we can withstand that, those increased costs are going to kill you. So this is what I mean by winter is coming. So my question to you is a couple of things that you really need to consider. Number one, have you got a healthy balance sheet? i.e., have you got enough cash in your business? Are you holding too much stock? Because if you're holding too much stock and then you can't access that stock, can't get rid of it, that's going to kill you. And for companies that are really capital intensive, have you got too much tied up in your capital? And I'll give you a great example. Over the last sort of 6 years, I have got a client that spent a lot of money on plant and machinery, to the point where their depreciation was massive and their HP payments were crippling. See, sometimes it's not good just to keep investing. And they've had to sell off a lot of their plant and machinery, simplify their business so that they can actually build enough cash reserves so that the business can function in any circumstance. So, a couple of things to think about. It's a big topic, not one that I want to cover totally today, but it's one I often cover with my clients on our one-to-one sessions. Now, if you want to have a better understanding of your balance sheet, or more importantly, have you got the right cash in your business, what you need to do to change your liquidity, what's your strategy going forward to make sure that when winter comes, you are protected and you are saved, head over to Boolkah.com and get in touch. So, many of you might be thinking, okay, I do not understand this balance sheet thing properly. Well, guess what? Failing to learn is learning to fail.